Hi everyone, I'm sure you're all wondering what's going to happen to the property market over the next few months. It's been quite a year, hasn't it? We did have a flying start following the uncertainty of the election and Brexit, and at the start of this year the property market did launch, and then it equally came to an abrupt end with the first lockdown, and it remained so for 2 or 3 months. But then the Chancellor in his wisdom introduced the stamp duty holiday, which expires on the 31st of March next year. I always felt that it should not have ended on a firm date. I felt that it should have been tapered off over 6 months to avoid a mini boom and avoiding that rush that would literally almost create a bottleneck that would grind the industry to a halt, which is actually what's happened. We've had 2 or 3 months of tremendous sales. However, the progression was taking longer and longer because conveyancers already working from home were just buckling under the pressure, as well as the other industries like surveyors and searches taking longer, and so on and so on. I have noticed a bit of a slowdown over the last couple of weeks, and following the Chancellor's speech yesterday, he did give us some indication of what the Office for Budget Responsibility feels is going to happen over the next few months and indeed over the next year or two. Whilst the Office of Budget Responsibility does expect house prices to fall over 2021 and 2022, there's bound to be an initial slowdown following the end of the stamp duty holiday, but that's just as much due to more completions happening before than a slowdown in the market as a whole, but it would be inevitable, hence the reason that I didn't want it to end abruptly. However, they do predict that over next year that on average the market will drop around 3.5% and 2.6% in 2022. If we break it down into regional sectors, then obviously the ones that have risen the most are the ones that are most at risk of dropping the most, and that also applies to the ones that have risen the least. In the London market, I do expect a fall of as much as 10% in areas, but London might be the first to come to an abrupt end, but it is always the first to recover, and that fall will be short-lived and the recovery will be very, very quick. We've seen already with the greater economy that literally in just 2-3 months coming out of lockdown, our economy was recovering at a tremendous rate, which is a credit to the UK as a nation and to the people as entrepreneurs and business in this country as a whole. So I have no fear for the greater economy on the longer term, but obviously this has been quite a crisis. We've never ever seen this before in our lifetimes. It's one of the worst peacetime financial injuries to the economy ever sustained. Now, despite the OBR predicting steady growth from 2022 onwards, they have revised down their anticipation of where the property figures will be in 5 years' time, but that's a long way off and anything could happen in the meantime. Working out from London, regions around the Midlands that have seen increases of 4 or 5%, that sort of figure will expect a drop of well below 5%. And then when we go to places like South Wales and the North East, where there has been negligible increase in prices or very minimal, then that will also be reflected in the fact that there will be minimal or negligible falls in property. So what should you do where you are now? First and foremost, the most important point that you must bear in mind is financing. If your mortgage is due for a renew, you're coming out of a fixed term agreement in your mortgage over the next few months, you need to plan for that well in advance, because when the economy is uncertain, one of the first things that banks do is they start removing some of their most vulnerable or at-risk products. So although we're talking a few products out of hundreds and hundreds and hundreds, the products that may have been removed might just be the products that you would have needed. So do not wait until the end of your contract, your fixed term agreement on your mortgage, to look around start looking sooner rather than later. Speak to your financial advisor, get some advice of what is out there, what's available to you, and perhaps what you need to do to ensure that you are in a position to get a best deal when that time comes, because sometimes the little things might just make the difference of you getting a good deal or a fantastic deal. If you are thinking about investing in property in the short to medium term and you're wondering, should you wait, then I would say this. Despite the expectation of an increase in distress sales that have sadly been caused by the crisis, I would say that there will not be as many as you may expect, because our economy has an incredible and wonderful habit of recovering very, very quickly. We need only look back to the last quarter following the end of the last lockdown to see how fast our economy was recovering. And even though 2 or 3 sectors in particular have been hit quite hard, I do feel that it will even itself out with restructuring and with new businesses and with many businesses changing how they operate after what has happened. But along the way, there have been other businesses that have flourished. So despite the short-term increase in unemployment, I do not expect that to be a chronic problem. I do expect that unemployment will begin to tail off quite rapidly towards the back end of next year. And I don't feel that any corrections, and I will use the word corrections because it will not necessarily be a downturn in the property market. That's more regional, and that's more a correction from possibly a little bit of a buyer's frenzy. If you are investing, then it's a case of what are you investing for? If you're investing for income, you may consider an apartment in a city where the demand is higher and the rental yield is higher. However, growth on apartments tends to be less than houses, but then the yield on rent on houses is less. So you need to make the decision based on what you want from your investment. But all I would say is that despite the fact that we do have a bumpy road ahead of us, and there are quite a lot of factors that may indicate that things are looking bad, they're not as bad as they may be appearing. That's not to say that things are perfect, but I, for one, have faith in our economy. I think the evidence is there in what has happened in the last quarter. I do feel that a recovery will begin fairly soon, and there will be some ups and downs along the way. And as I said, it's more regional. Certain areas won't really be affected by any correction because they were not falsely inflated by any increase in demand, and they tend to just rise incrementally at a steady rate, and they're not really affected by any downturn. That's all for this episode. If you have any questions about anything, whether you're buying, selling, investing, renovating, please feel free to get in touch anytime, either by message, email, call, and I'll see you in the next video.